What's up, guys? How's it going? Welcome to today's recap for the London session for Tuesday, the 5th of April, 2022. So, 4-hour chart. For me, this is quite a funny one with structure. I think I've tried to kind of make it clear in these recaps and also sort of the pre-session charts that I post. When it comes to swing structure, I'm not really personally viewing that as swing structure. If I'm totally honest, the way I kind of view that is how a few of you are also doing it, which is currently also viewing the 4-hour swing structure the same as the daily structure, right? So essentially viewing that as one leg down, and now we're just having this larger complex pullback, right? But I know I did say, right, if you want to keep it nice and mechanical and you use 80 pips as swing structure, that's totally cool, right? The thing that you need to sometimes use is a bit of nuance, is just to understand that because the daily's bearish, right, the weekly's bearish as well, right, and then we can see the larger momentum is to the downside. Yes, although the 4-hour may have switched bullish if you map it in that way, just kind of be aware in the back of your mind that it may have only switched bullish to do what? To facilitate the daily objective. And the daily objective is just to have that swing pullback. So once the daily, just resize this, get rid of these old annotations that have jumped out of the way. Once the daily has pulled back to the premium, right, above this red line, this mitigated supply in the premium, that can be a very good indication that now its objective is complete, right, and now we're ready to go take out that weak low. So if you do have your structure, let's say, mapped a little bit more aggressively, and yes, it is bullish, just be aware that if the daily, right, the next kind of logical time frame above that, if that's fulfilled its objective, then it's likely now the 4-hour may be ready to switch bearish again and go. With that said, I know a lot of you are also just viewing that as one leg down, and if I'm totally honest, that's basically how I'm sort of viewing it as well. Okay, so I'm not really weighing that much importance and necessarily viewing the 4-hour as bullish. But even with that said, right, there's kind of only real two sort of major possibilities that we need to be thinking about in terms of trade ideas with all of that said, and that is either we have now mitigated that premium supply in the daily chart, we have this 4-hour buy to sell range, okay? Obviously before we were looking at it coming down to that refined candle, but when it comes very, very near and then has such an aggressive and large move away, right, that's a decent, over 200 pips, 200 pips, okay, you can go, okay, well, it's pretty likely, or there's a decent chance we're probably not going to come back to this refined pivot, right, so we can just refine it, or unrefine it, I should probably say, to the buy to sell range, okay, and go, okay, that's been mitigated, we've had a strong V-shape rejection from there, 4-hour bearish change of character, and we've had a very aggressive sell-off, right, essentially that straight movement up, and then that upside down V, okay? So what is everything, all the points I'm trying to make here? Well, the way I view it is that it's pretty likely that that daily pullback is now over, and there's a decent chance we can now be going and taking out that weak low. But a very good argument, or at least a good logical way to be looking for longs, is that we do have this larger internal price action here, right? And this demand chain is still intact. So yes, we were initially looking at this 4-hour zone, okay? Right, but that 4-hour zone did not sweep any liquidity. Okay, didn't sweep any lows here, obviously, it just came up, it pulled back, and then it went up. There's no inducement in the leg, especially when you see these kind of very, very clean, straight, big pushes up here. A lot of the times, these zones will not hold, or they'll be used for liquidity. They become inducement themselves, right, for POIs below. Okay, so I didn't have the zone originally drawn on here, even though I can see it, just because it's basically the majority of it was already mitigated and it pushed away. But as we know, just like over here, when I initially viewed that one as mitigated because it had a decent pullback into it and a movement away, that doesn't mean that price can't still react from it, because there are still orders within here, right? Deeper within that wick. Likewise within here, below this pullback that came into it, below here, there can still be plenty of orders within here that can contain price. Doesn't necessarily mean it's going to go on and continue doing that, but it still means if we're looking for, an entry with 5, 4, 3, 2 pip stop, it can give us enough of a reaction to justify looking for longs within here, okay? Or likewise, if you refine it to the wick, like I just did there in the pre-session analysis, okay? So maybe I'm just thinking that probably wasn't my best explanation of everything, the point I'm trying to make there about structure, but it's kind of, what I'm trying to say here is, if you view the 4-hour chart as bullish, that's cool, okay? So therefore, you'd be looking for that 4-hour high low to form within here, within the demand chain, right? There's absolutely nothing wrong with that. But it's also, if you also viewed this as not swing structure, you're viewing that as the pullback slightly completed, but more so the nature in which we've returned to this level. I think there's a pretty, I would be more leaning to the argument that we're more likely to see something like that. But all of that said, if like the majority of you are entering on the M1 or maybe the M5 with quite, a reasonably small stop loss, and you're only going to be targeting 5-10R with the majority of your volume, then what do you need? You only need about a 20-30 pip movement, and that's that. So with all of that said, you don't need to have the most accurate of higher time frame forecast of all time, because if you're not trying to swing sort of 200-300 pip moves, okay, you can go, right, this is a decent level to be looking for longs. There's plenty of risk to reward up to the next 4-hour supply zone, etc., and then potentially we can look for from shorts from within here if this is just going to give us a bounce, to then look for that movement there. Okay, cool. So that's the 4-hour chart, or at least kind of the way I view it. Now M15, this is where it gets quite interesting for today's price action. So let's talk about the 4-hour chart for one more second, because obviously we'd come into this level here, so you can technically say we are within 4-hour demand, and that's absolutely valid. I just know a lot of you, right, if it's already had that slight mitigation, then you can refine it to sort of an unmitigated level. But for me, I would be aware in the back of my mind that we're pretty much within this candle, so all of this is 4-hour demand. But I personally still want M15 demand to be hit if I'm going to play that counter trend movement, or I need there to be an M15 chock from the 4-hour demand if we haven't already reached M15 demand within there. Okay, so because with this price action, there had not been a bullish M15 chock, because all of these candles from here broke the prior candles low, there is no obviously internal high for price to break until all the way up here. So this would be the level or the high that would go for there to be that true M15 change of character, right? For the true internal structure to switch bullish. Okay, so because price had not reached M15 demand, within the 4-hour demand, I would need to see an M15 chock first. Okay, but once price reaches it, then you can start to look for entries, okay, for me. So if I scroll across, you can see I actually originally had it drawn on the inside bar, but even if I draw it to the next candle, it still hadn't been mitigated. However, if I then take it to this one, I think it just about had, but I just hadn't drawn it like that. So I didn't view that as a mitigation, but it does totally make sense to do that. So if you had drawn it in that way, and you've drawn it from more of what we can call the range demand, right, where you take it from the high of that candle, then you can say, okay, we've mitigated M15 demand within that 4-hour demand. Yes, we haven't had a bullish chock, but then coming into Frankfurt, where was price? Well, you've got this M15 demand here. Again, it's weak demand. I don't like it. Why? It hasn't broken any structure. It's broken nothing in this leg. We still haven't had that M15 chock, but you will see these play out, right? When we can start to build some demand chains, or what you can wait for is to see how price reacts to it. So price comes into it, and then you could look for some form of a breaker structure, and then you can start to build a bit more of a story behind it. For me personally, I was just chilling. I was either waiting for price to come up to here to potentially look for some shorts, or I was viewing essentially these lows as weak lows. I just thought it might be inducement to then put down a little bit lower, right, and then look for that movement there. Okay, so that's personally why I just literally wasn't even really paying attention to price, and I kind of wasn't even analysing this at all until after the fact, and I wasn't that interested. But for those who did take longs, yes, there is logic behind it, and if you want to be a bit more aggressive and study these, then yeah, this is something that you may want to consider in the future, bring into your plan. But my advice before we even look at any of this would be, you don't have to. I would say keep it very simple. Stick to the beginner trade plan, right? Focusing on those pro M15 trend trades only. If you feel like you are ready to kind of progress to the next step from that, then the next, for me, logical step is to only trade against the M15 trend when there has been a true M15 change of character, right? So in this case, it would have had to be in this high. Okay, so that's why I would say the majority of you should be focusing on if you're starting to look at counter M15 trend trades. Then the next step from that, right, if you want to be a bit more aggressive, is something like this, right, where we can see, yes, there is this M15 demand here. It is weak. It didn't break any structure. This is a weak low. But when price comes into it and then it breaks another form of structure, right, this is what we're talking about, iChocks, all of these names, they do get totally confusing, and I get it. Maybe we need to come up with something that's a little bit more better defined, just because I appreciate it can give a lot of confusion to newer members. But essentially, all it is let's say you want to see, is this demand going to hold, and you want to see some form of market structure be broken, just to give you some signal that potentially this demand is going to hold. Then that's essentially what we're doing, is we're just looking at the nearest high that's been broken. It's not the true chock in the way that we look from it, but this is another way of using a little bit of nuance to just read, okay, right, we obviously have this bit of structure coming in, okay. Now this one's a bit tricky to see. You can be forgiven for missing it, but this candle, if you look at the low, so if you look at the top up here where it says the number, the low of this candle is 634, and the low of this candle is also 634. So on this data feed, what does that mean? It means this candle here, right, it failed to break this prior candle's low. So that means we've had a pullback, okay, which then means that this can then become, your, I don't want to say the internal high because it's not the true internal high, but you guys hopefully can understand what I'm getting at. Price then breaks it, which then gives you this level here, which is then confirming potentially this may be holding, and then you can look for some aggressive longs within here to play a potential pullback. Okay, so again, if you can't see it, you have a down move, an up movement, a down movement, right? And then we pull back, and then we come into this level, and then you start to get that volume kicking in sort of pre-Frankfurt, and then you can look for that inducement in here. So again, another big part of this is session timing, because we know that when Frankfurt opens around 7 a.m. UTC +1, I should say now, because British summertime we're in, if you see a kind of a level setting up, that is another big confluence. That's another big tick in the box, right? Rather than setting up maybe during the Asian session or later in the London session or London low or at the end of New York, we know that generally a decent move is going to start to kick in, right? At least a 10, 20 pip move when that Frankfurt volume kicks in. So if you see something setting up that you can make sense from, i.e. if you had this as an M15 demand mitigation, right, you've drawn it on that, you can see that makes sense. Yes, okay, there's no structure within this leg to give us that M15 chock. So technically this could be a weak low, but prices then come into this demand. It's then giving you, right, some form of a structure break. We're calling it an eye chock. Again, appreciate it's not the best name in the world, but it is what it is. And then price comes in into M1, and you want to play that pullback because you like that we're within, remember, where are we on the higher time frames? Let's delete my drawings again. Fantastic. Or is it doing that thing where it won't do it on this time frame? Bear with me while I jump around, but it does show it up on this window. Yeah, okay, trading view is useless, but bear with me. So, right, we're within this daily demand here. Okay, so if you want to start building a picture for why longs make sense, well, this is where price pulled back into this demand level. This was the initial touch, right? It reacted, it pushed up, and then it closed above the reaction. So that's why technically this is actually a daily supply to demand flip. Okay, it doesn't mean it's definitely going to hold, because remember what I was saying, this zone, although it has technically had a failed reaction here, there can still be enough orders within these zones to continue down, right? Flips and obviously don't have 100% strike rate. So until price actually trades above this zone, right, this zone is still valid because there are still orders within here, there's still supply within here. But there's a decent edge that this is the extreme of the reaction, right, of that leg. It caused a failed reaction, so now you have this as a valid flip zone, and it did sweep liquidity, okay? So that's one tick in the box for looking for longs. We're coming off that major monthly, weekly demand. You can look at sort of this internal structure, okay, making that series of larger internal higher highs and higher lows, and now we're coming to this level. Yes, that initial 4-hour demand zone we had failed, but really, this overall demand chain, right, you can see this being that internal swing back and that movement up, right, it's still intact. So that's another tick in the box, right, within that 4-hour demand, within that daily demand. So there's decent potential we could see either that move or at least a bit of a bounce up into maybe around here, right? Okay, cool. Drop down to then the 15-minute. Let's say you have your M15 demand drawn on that range, so that it had a mitigation, right? We've had a bit of a bounce away. Yes, there was no structure in this leg to break, but again, this is where if it's a bit more advanced, you can use a bit of nuance, and you can just zoom in a little bit and look at the price action within here. So it is more aggressive. That's why, even I wasn't really looking at it, but we have this demand. So now you're thinking, okay, I don't really like this level, potentially we could come lower, but I just want to see a structure slightly shift bullish, right? Just to confirm that maybe this level is holding. And that's what we had in this instance, right? Price came up, it pulled back because that candle failed to break the prior candle's low. Then it comes down, then we come up and we take it. So that's what I guess we can call the eye chock, right? It's the break of the internal structure of the internal structure. And that's why it's a bit confusing. We just have to have a sit down one day and just maybe redefine some of these names so it makes it a little bit less confusing. But it just comes with time and experience, right? And I know some of you more experienced guys can understand that slight difference, okay? So then that happens, and then again, session timing is a big important factor here. You come into your desks, just coming to Frankfurt Open, okay? You're starting to see potentially we're going to get that move, and then you can look for longs within here. So again, it's not something I was personally looking at in this instance, but there is logic behind it for some of you who may be looking at the more advanced traders, kind of maybe scratching your heads as to why, okay? Now, once this initial move had happened, and then we got up to around this level, can you keep looking for longs? Yes, of course, but just understand it's a bit more aggressive because now where are we? Now we're within essentially this buy to sell range, right? Because this is supply. Yes, there is still potential we can move up to a refined pivot, and I personally wouldn't really want to look for shorts until we had, But do you also want to be looking at, M1 continuations within around these levels? Because, we had this candle here. I'm just going to draw it from the top of that candle to the bottom of the candle, or I can do it a bit more accurately for you. Is your M15 demand? Yes, it's technically a demand level, but this candle did not break any structure, right? It broke nothing to the left. It broke nothing here because price was already above it, right? So this is very weak M15 demand. Risk to reward is against you now. Yes, price could have gone higher up into this level, up into this supply, or even higher. But for me, considering, all else things considered, we haven't had a true M15 change of character yet. We're now within the M15 supply range here, right? Would I want to keep chasing continuations? No. If you are going to do it, where I would advise, this ends up even getting swept anyway, but would be this level here. Because at least, right, this is one movement up, all those candles break the prior candles high, then prices come in. And then at least you're at kind of the extreme of this leg of price action, right? And then you could maybe look for that movement from within here. Rather than kind of trying to buy up here, it's much more aggressive at that point. And then towards the end of the session, price ended up selling off reasonably aggressively, broke through this low, ended up sweeping the internal range of liquidity behind that low, and then we got another aggressive movement away. So again, is that a trade I necessarily take? Not really. I'm just chilling at the moment. I don't really like any of this. But there is, logic behind it. It's just some people are going to be a bit more aggressive than others. In this instance, I'm not a massive fan of what I'm seeing, so I'm just being a little bit more patient. Maybe I'm being a bit too conservative. It doesn't really matter, right? Because I know at some point I'm going to get that clean high time frame price action where I have high conviction, and then that's when I'm willing to be more aggressive with my lower time frame entries. When I feel like I don't really like what I'm seeing, I can understand the logic behind it, I'm just going to chill, I'm going to be patient. I'm either going to wait for the pro trend stuff, or I'm going to wait for something a lot clearer where for me the high time frame intentions are a lot clearer. So yeah, for the majority of you, again, have to keep, I know it can be a bit hard, especially when you maybe see other traders posting trades in the Discord, right? It can, of course, provide a little bit of FOMO, but don't worry, focus on the pro M15 trend trades only. Maybe you want to introduce a second pair, you want to look at something like Aussie dollar as well. That's cool as well, but just be patient, wait for the pro M15 trend stuff, and you will be rewarded. Likewise, if you feel like you've progressed from that now and you want to start looking at counter trend stuff, spend at least a month, if not longer, only trading counter M15 trends when we have a true M15 chart. Okay, so in this case, you would have had to wait for that high to go, right? Because that is the true M15 chart, because that's one straight leg. Okay, doesn't mean you can't pay attention to this stuff and start to journal it, make markups, understand the logic behind it. But my advice would be don't start risking your capital on it and all these things, because it's only going to damage your confidence when, if you keep taking these aggressive trades, it's all just going to get a bit messy. So try and be a bit disciplined and focus on the high probability stuff. In my opinion, if you are not consistent with doing that. But of course, there are a lot of you within the community who are, and that's cool. This explanation is not for you guys, because obviously you guys already kind of know what you're doing with all this. This is for me really trying to dive into it and explain to obviously newer guys with this style as to kind of what's going on here, and potentially for learning that now for when you may want to bring that into trading at a later date. But the point I guess I really want to make here is don't sit there thinking like, these are the trades I should be taking, I'm missing trades now. Not at all, right? Have that strict and clearly defined trade plan and just stick to it. Stick to it for long term. You can pay attention to these, but don't view these as missed trades, because I'm not viewing it as a missed trade. I'm happy to leave that. So yeah, it is what it is. Let's take a look at the M1 price action. So when we initially had that, again, hate the term, but iChalk, right? This level here, it's not the true change of character. It's kind of just zooming in a little bit. And do you know what? Let me kind of make another point a little bit clearer, because although we have a very, very specific way of defining change of character, and it's important and you should stick to it, ultimately, the reason that kind of concept comes around and why we use it is we're just looking for a shift of structure doing one thing, and then suddenly it starts doing another thing, just to give us a sign that potentially things are changing in the desired direction. So what do I mean by that? Well, we can just zoom in on this section of price action here. Price is doing this, it's bearish, and then suddenly it from just this section here goes from making lower lows and lower highs, it suddenly makes a higher high. So if you wanted to trade from this level, it's just another little tick in the box that potentially, okay, things might be changing, and then we can go. Ultimately, that's all a change of character is. But yeah, anyways, stick to the true way of doing it, the way we teach in the course, for most of you, until you kind of feel a bit more comfortable knowing when to use those nuances and when not to. But if you were using that and you did want to take that trade, then obviously that gives you your M15 demands. Now there's a few ways you could have got in. You could have got in with a pure risk entry. There's nothing that shouts out to me. It's amazingly clear on the M1. There's a few zones up here. So, if you're going to take a risk entry, generally you want to be taking the one in the extreme, and this is obviously the extreme, right? Because there's nothing else below this on the M1. So that's why for me, if you were going to take that and you're going to take that as a risk entry, this makes the most sense. Of course, as well, some of you, if you use wider stops, right? If you don't use a fixed stop loss like me, and then you see another zone, then of course that's another way of getting in, right? You can then cover both zones with your stop like that, right? That's another way of doing it. Or you can draw them both on and wait for an M1 confirmation entry from them. But I don't believe either one gave on because we had this initial zone, right? And then there was no M1 chock. And then we came down lower into this zone, and again the M1 chock was up here, so then you wouldn't have got in on that initial entry unless you took a seconds confirmation entry from down here. Okay, now when we start going up higher, again this is where I would not be a big advocate of kind of, I don't want to say chasing, but trying to take those M1 continuations further up in the leg, considering how aggressive this overall move reasonably is anyway. And obviously, like I was saying, once we got up here, we're within that supply. You can see I've drawn in this premium discount tool. It's of this internal leg. Okay, I know we basically always just use it on the swing structure, but it's another way in which you can bring that within here. Okay, because obviously this is still a significant leg of structure. It might not be swing with the way you define it, but you can still, again, use a bit of nuance and to realize that this is still the premium of this section of price action, right? So it's another negative confidence for wanting to push for longs at this point. Also, we had then broken past this high here, and what do we usually expect after price breaks any sort of high or low like that, right? It's internal range liquidity. We expect price to have a bit of a deeper pullback. So that's why often when you see that sweep of internal range liquidity, that first M1 low here can end up being using for liquidity for that deeper pullback. Okay, so let me again try and explain that. When price breaks a high like this, right, quite a clear and obvious high we can see, there is liquidity behind here, okay? So then when we come over here and price breaks up above it, what do we expect after price taps into those liquidity or sweeps liquidity? We usually expect a bit of a deeper pullback, right? So if you're then still looking at these M1 continuations and you're just trying to play like each pullback essentially, right? Once we get that, usually that first M1 level will then be used for liquidity to fuel that deeper pullback, and then we get the continuation of that move. So that's why you want to be getting in on those M1 continuations reasonably early in the move, or if you see kind of an obvious high or low like that, price breaks past it, you want to wait for a bit of a deeper pullback first before then continuing on with those moves. But and then we came down again to this demand. We broke through, we swept those lows, we even just swept that low as well. The extreme sort of demand stayed intact. So, I drew on this on the markup as a potential entry, right? The M1 entry model makes sense. Would it be necessarily something I would take? No, but there's logic behind there. But I thought it was interesting to explain the M1 entry model because the M1 price action is clean. I'm just gonna move this out of the way because obviously it failed. But we get this sweep of this low, we just about get a sweep of this low, right? So it's a decent amount of super liquidity. We have these M1 lows as well. So price comes in, aggressive, nice V-shaped movement away. Okay, we come into supply, we fail to put in a lower low, and then as soon as price closes above the reaction here, all right, anywhere from the top of this reaction to the base of the reaction is your supply to demand flip. Price instantly comes back into it and mitigates that demand and then pushes up higher, right? Because you need to wait for the chock. Then once we get the chock, now you can look for your entry. Okay, where you're going to enter? Well, the flip's been mitigated. So then this is your next, this sell to buy candle is your next demand, right? And then that would be you entering in with your entry here. Okay, and then you could have caught that trade. So more than a valid trade, it's just aggressive with this overall movement, and personally I just view price action as pretty indecisive at the moment. Also, and this is where it can get a bit tricky, trying to trade this price action, is this sweep is also what? It's a bearish high chock, right? If you are looking at the internal price action of the internal price action, again, this is why it gets a bit confusing. This is the true internal high and low at this moment. This is why everything trading in between here is a bit more advanced for longs, right? And I would say stay away from it. You don't have to understand. You don't have to trade this price action is what I'm trying to get at. So now we've had a break of that low. What is this? This is the supply that caused that low, right? So potentially we may be selling off from here to come down lower, or potentially we might mess around, come off here and go up higher. I don't know. It's messy. It's for me. It's I don't need to be looking for trades within this. So I'm just chilling. I'm waiting for the clearer stuff, right? So that's basically my view of price action at the moment. And who knows, right? We might have now mitigated that M15 demand within the 4-hour demand, within the daily demand, and we may be starting now ready to make that higher time frame movement up. But right now, it's not really an area I'm loving for longs. Potentially we can keep breaking these highs and start to see supply fail, and we can start to build some demand chains. Then it makes a bit more sense, right? We start to see this come in, etc., etc. Likewise, sells from here make a lot of sense. I'll be more than happy to trade from there. But I'm also aware that it's quite low down on this leg if you have this as your swing structure. But for some of you, right, I know some of you have that as your swing high and your swing low, which for me that's fine. It's also valid, right? It's swept liquidity, which is typically what swing highs and swing lows do, right? It sweeps the liquidity and then you have a nice sharp movement down. Let's see how big it is in pips. It's 20 pips or so it's decent enough. But for me, this is where I use a little bit of nuance. I don't classify it as swing structure, but I'm still aware it's a decent, significant sort of internal leg, right? And that's why price is starting to come up into here. I wouldn't really want to be pushing for longs. I'll be waiting for price to come into this level to potentially look for one last move into this level, and then I would love to see potential long movement from here. So yeah, it's all getting a little bit messy, a bit tricky. And if I could kind of summarize it and give you my most simple markup, if I was just doing this for myself, right? If I was just doing this for my journal, I wasn't sharing this with you guys, how would I have kind of smarted this up for my own personal records today? I literally probably would have just adjusted this to this and just said this was M15 range demand. I didn't originally have that drawn on for the session, and then price basically moved away. Didn't come up into my pivot level for shorts, and then I just would have left all of this alone. It's just not something I'm interested in as things stand, and that's really about it. But I am explaining to you guys, or doing my best to explain why there are longs from here. I see them, I understand the logic behind it. It just wasn't personally something in this instance I wanted to trade my capital from. Where probably I would have had a bit more confidence and I would have been actually paying attention to price action in this instance would be if this low here had have mitigated the M15 pivot demand that I'd already drawn on prior to the session, because that's what I was prepared for and mentally ready for. I was waiting for that M15 pivot to be mitigated, and then if I saw an eye choke like that, then I'm going to be a bit more confident, right, to take it, because there are going to be instances where there just didn't happen to be any little pullback within here, because therefore there was an M15 shock. So this is when then you have to use those eye chokes, because otherwise you're going to have to wait for that high to go. Okay, so hopefully that makes sense. Hopefully I haven't confused too many of you sort of new guys to this strategy, but that's why I'm really trying to drive the point home is you don't need to be getting involved with this. Keep it very, very simple. Stick to either the Pro M15 stuff or wait for those true changes of character before considering counter M15 longs, okay? And just keep it simple. Don't get FOMO. You don't need to trade this if you don't want to, or if you're not consistent with the high probability ways of trading, okay? So hopefully I haven't confused you guys with structure in that instance. Rewatch it a few times if you need to, or as always, send in to your questions in the Discord and we'll do our best to try and explain that. So hope you guys have a good New York session if you're trading that, and I'll see you in the next one. Cheers guys and girls.